Hello, everyone. This is Sebastian McMahon from IA Financial Group. I'm back with another Economy and Finance 101 video, this time on portfolio management, strategic versus tactical. So, seems complicated, but it's a very simple topic and try to make it as simple as possible for you here today. So, when you invest in a fund, whether it's a mutual fund or a segregated fund, you should always take time to read the investment policy statement. So that's kind of the contract between the buyer of the fund and the manager of the fund. And in there, you'll find generally the target weights for the assets that are in there. So let's work with an example here of a 50% stock, 50% bonds fund. And within the stocks, let's say we have 30% Canadian equity and let's say 20% US equity, and within the bonds could be something like 15% corporate and 35% governmental. So let's say this is what's written in the investment policy statement. That means that the target that we should respect as a fund manager over the long run would be these percentages. And also in the investment policy statement, typically you'll find also a plus or minus, so a deviation that's allowed within the contract of the fund. So that's what we have to work with as portfolio managers. So the neutral weights that I just named would be the strategic asset allocation of the fund. So that's the long-term part. So strategic equals long-term. And the deviations versus these targets would be the tactical part. So tactical, short-term, strategic, long-term. So when we build investment policy statements, the 50-50 that I mentioned with more Canadian stocks than US stocks, it's not just something random that's just written there. There's some portfolio optimization behind that. So we as portfolio managers, of course, I won't give you a true recipe here, but we formulate expectations of long-term returns. So we can do that in multiple ways. Let's play here with the thought experiment that we just looked, let's say, at the history of returns over the last 15, 20 years. We looked at the annual average return. We look at the average annual volatility of the asset classes. And we'll look at the correlation between all of these asset classes. So let's think about, for example, Canadian stocks, US stocks, international stocks, emerging market stocks, and within fixed income, let's play with sovereign bonds and corporate bonds. So we have all of these pieces here. So we run a portfolio optimization, and that gives us, well, a picture of if these returns, if this behavior repeats itself in time and we don't deviate from that, well, what would be the neutral ways that would be best? And that's what we use to build investment policy statements. So that becomes the strategic part of our mandate. Now, the tactical part of our mandate is based on our analysis of the economy and the financial markets. So we'll deviate from these target weights in a way to add value to the funds sustainably through time. So that's our objective. So for a month, for a quarter, for a year, we could see, based on our analysis, based on our tools, we could see conditions that we think make it more interesting to hold even more stocks rather than bonds, or the reverse, or more Canadian equities versus emerging market equities, or the reverse. So these would be tactical moves. So tactical asset allocation is recognizing that even though over the long run, some asset classes tend to do better than others, but there's some value in deviating from that, because not everything goes in a straight line, and there's volatility, and some asset classes that have very strong returns one year can have negative returns the year after, and there's volatility. So there's ways that we as portfolio managers can add value in the portfolios by deviating from the strategic weights. So very simple, tactical moves or short-term deviations, strategic moves are long-term views, and the investment policy statement is what ties everything together here. So that's all I wanted to present today. So I hope I made this seemingly complicated topic simple. So if you want more content for the Economy and Finance 101 series, you can always visit the ia.ca/economy webpage. You'll find ample material there. So thanks everyone, and I'll see you in the next video.